folks, Dan Freer here, the Mortgage Update. Today is June 17th, 2020. So, sorry, I have a new camera coming and it's not here yet. It was supposed to be delivered this afternoon and I left my other camera at the office. So, I apologize for that, but same great content. So, let's go on. What's happening today? Well, as I say every day, we are determinant on the Fed. Mortgage rates, bonds, bond yields, stock market, everything. And I'm going to show you just exactly how, or prove my facts here in a second. So let's get on to it. What happened today in the market? Absolutely nothing. Not a bad thing. Again, I'm going to dwell on this. We like this. We like stability. I'll take it. If rates stay this low for, a year or two, I'll take it. They're at historically low rates. It gives people the time to think about it. It gives those that were, furloughed or unemployed for the last few months, gives them time back on their job, back on their feet. It allows them the opportunity to refinance, take advantage of these rates. It allows us the opportunity to help you, try to increase your credit scores. Those that have leases coming due in Chicago, most of the leases come due April, May, June, July, and we're in June coming into July right now, and purchase applications are spiking they're higher than anybody anticipated they were going to be. So I'll take these, this right here. So we really can't go over any fundamentals such as, what the stock market did, GDP, employment, unemployment, inflation and everything else. We're going to monitor the Fed. And that's where, I started the video right here. So let's wrap it up. What happened today? The stock market was down 170. I'll take that also. We had a day last week that it was down 1,800. Would you rather be down 100 or 1,800? Exactly. I mean, you'd rather be up, but if I were to pick the two, I'm picking this. The rest of the data that came through, mortgage applications are up all over the board. For purchases, they're up huge. Refinances, they're up 106% year over year. Everybody, no, not everybody, the majority of people were taking advantage of this. I don't know how many, I think I got just shy of 10 loan estimates in today from various people all over the country. Thank you guys. But what I need you to do is reply quickly, because I got a lot of contracts in today, or people looking to buy, that their rates were, on average, I was able to get them a lower rate by a quarter, so 0.25%. And probably on average, I was saving on closing costs between about $2,500 and $3,500 in costs. Guys, that adds up huge over the long term of a loan. So your lenders, here's what frustrates me, is the lender will come back and then, that you already been approved with, and they'll start to counter from you. Well, this and well, that. What they should have given you the best opportunity right out of the gate. So if you wouldn't have reached out to me, they wouldn't have done any better for you. That ticks me off. So I appreciate you guys looking into things. And please, I'll say it this way. I'll back up what I promise you when I send something back to you saying, here, this is what I'll do. I promise you that's what I'll do. Even if the market moves a little bit, I have the ability to do some variations in rate and closing costs. If I put it in writing and promise you that I will get it done and everything else matches to a T throughout the whole process, I will guarantee you that what I quoted you at the beginning is what you will get. So I'll leave it at that. If you go down through here, some of the housing numbers came in very good. Building permits were down a little bit, but the building sentiment was big. Builders are coming out saying, they are predicting a more robust building in the next 6 months to 12 months. Purchasers were down a little bit, but purchase contracts are way up. The reason why the purchase numbers are down, there's not as much inventory out there. So if you're looking to sell your house right now, get that puppy on the market, because you're going to get top dollar for it. You're probably going to get multiple offers. On the flip side of that, if you're looking to buy a house, if you find something that you like, you better grab it. So you better be prepared and have a pre-approval in hand. I'm saying a pre-approval, not a pre-qualification. The biggest difference is a pre-approval, you're basically done. And when you go to our website, you're going to go through the application process. At the end, we're going to ask you for all the documentation we need from you. I know you're going to say, "Well, it's kind of a pain in the butt up front." Trust me, it's going to save you a lot of grief in the back end of this thing. So, because we can get you basically approved and be kind of like a cash buyer when you put the contract in. You know you're going to close, because what we're going to do, we're going to validate your income, we're going to validate the money you have for your down payment, and everything else. Prior to issuing you that pre-approval. We can usually do that within an hour. So I'll show you at the end where you go to do that. You're going to go through housing starts and all that. But if you're not looking to build a house or anything else, you don't really care. So I'm not going to go through this, because we're looking to educate you on where rates are, why you should do things now, and how to get this process done, and what I do to help monitor for you what's going on with mortgage rates. Economic calendar. Let's go through what today had. The housing starts consensus was 1,095. These are in the thousands. It was down a little bit, not much at all. I'll take that. Building permits, right in line. And the rest of the stuff is nothing, because it's just Federal Chairman Powell. He heads the Federal Reserve. He spoke today. No reaction in the market, as you can see right here. And the other markets, I'll get to that in a second. And that wasn't so bad. But again, everything is predicated right now on what the Fed is going to do. So here's the next thing. And we're going to go to this. Mortgage rates are steady, waiting some kind of information. What that information is basically through here. There's two facets that's going to control some things. And we're looking at what the Fed is doing, and what this pandemic or the coronavirus, if it's going to raise its ugly head again. Okay, so here's the two analogies. One, we're going to come up with a coronavirus immunization. That will hit the markets and hit it strong. If they come out and say, "You know what, we got an immunization for this thing, and it is 99% proof," and we get a little bit of good news in the economy, you're going to see the stock market rally like a crazy person, and you're going to see mortgage rates spike up. Conversely, the coronavirus, is there a series 2 or a second wave coming? Don't know. Some states there is. Some states there isn't. Is it a media, blowout, or is it truly facts? I'll let you determine that and monitor that market. But my prediction is the coronavirus second wave isn't going to be as bad. The media might pump it up to be more than it is. And I can see, because of the profit margins on this thing, you're having everybody and their mother scrambling to find an immunization for this. So I'm thinking it's going to be available sooner than later. So that being said, again, if we get the immunization and any good news in the market, you're going to see the stock market rally big and rates spike up. Even though the Fed says they're going to continue to buy mortgage-backed securities and everything else, you're going to see rates increase. And I'm not going to say they're going to 6 or 7%, but they're not going to be in the low 3s on a 30-year fixed. So if I'm a betting man, my bet is on the first analogy I said, is we're going to come up with a cure for this sooner than later. And the economy is going to be somewhat of a V curve on its recovery. So I'm saying, like I said, even though the Fed's saying they're going to pretty much work on keeping rates as low as they can, I'm saying 2, 3, 4 months from now, you're going to see rates maybe 0.5% to 1% higher than they are today. That's my prediction. Watch this in 6 months, and we'll find out then. CNBC came out and said housing starts rose at 4% versus 22% as expected. Yes, it is lower, but the sentiment by builders is really good. The sentiment by buyers, really good. So this is probably going to self-correct itself within 30 to 60 days, meaning you're going to start seeing housing starts pick up quite a bit. Home mortgage purchase applications are at 11-year high. Guys, this is pre, the 2008, 9, 10 bust. So you might think, oh, an 11-year high, that's good. No, this is fantastic news. So if you've been putting off, I think I might want to buy a house, don't put it off any longer, because here's what's going to happen. Rates are only going to go up. Houses are only going to go up, and you might have to renew your lease for another year. So what's everything going to be a year from now? Don't know. My prediction: rates higher, mortgage or home values higher. So that's that part of it. Here's what I like to do. If you want some daily or weekly updates, go to my website, therateupdate.com. I have a blog section there. The YouTube channel and social media channel is coming soon. But we post on here probably every week and just give you some tidbits on what things that are interesting people right now. And we'd love for you to read these and just educate yourself. That's what the channel's all about. If you'd like for me to help you, so let's say this. You want to get pre-approved and you're like, what do I do? You don't need 20% down. You don't need 10% down. You don't need 5% down. If you're a first-time home buyer, you can get in for 3% down. Veterans, 0% down. If you're in an area where you might qualify for a USDA mortgage, it doesn't mean you're buying a farm. It just means you're out of the beaten path. You're not in the city limits. If you don't know, call me. Let me look in the areas that you're interested in, and let's see if that's USDA eligible. If it is, that also is 0% down, meaning 100% financing. I'll also work with you and your realtor. If you don't have a realtor, we have them all over the country. We can refer you to somebody, and a person in the area that you're interested in. We have them all over the country waiting to help you. So if we can be of any help, please click the apply now button and get the ball rolling. If you want to talk to me personally, give me a call at 844-775-LOAN, and loan is 5626. If you'd like to email me, and I got inundated with emails today and I'm trying to catch up this evening, but shoot me an email at dfrio, which is FRIO, at preferredrate.com. So that's dfrio at preferredrate.com. Here's what people are doing. They're out there buying houses. They're getting a quote probably from where their realtor told them to go to. In most cases, that lender is looking out for their best interest, not your best interest. So you're most likely to get a higher rate at higher fees. And that is proven every day by me, probably 5 to 10 times. So if you want a secondary quote or a backup, shoot me or email me. Email me your what's called the loan estimate or your fee worksheet. Your lender has to provide that to you. If they don't or won't, don't use them. Don't use them. You don't want to be surprised. Especially our average loan right now is $330,000, about a $350,000 to $370,000 purchase. You don't want to be surprised and come to find out, oh, you know what? There's $8,000 in fees. Happens every day, and I showed you yesterday on Wells Fargo. If you have a mortgage right now, your rate is over 3.5 or 3.75. If it's higher than that, please do something. Call me. If you call your current lender, they might not have the program for you. Somebody called Wells Fargo the other day and said, hey, I got an FHA loan. I want to do an FHA streamline. Can you help me? But I've been in it for 5 years, but I'd like to do a 20-year because the rate differential gives me the same mortgage payment at 20 years. They're like, can't do that. I can. So reach out to me. Email me a copy of your mortgage statement. That's going to give me the data that I need. The only thing will be missing is your credit score. Your credit score, the best way to get it, I actually created a website about 5 years ago, creditscoresandmore.com. That's plural, creditscoresandmore.com. Go there, click one. One will give you a free credit score. Your credit score will probably end up being pretty close to that, so shoot me that score. Or if you really, truly want to know your credit score, your mortgage FICO score, click tab number 2. It costs about $40. You'll get a discount if you use the site. And it'll say your TransUnion mortgage score is this. That's the number I need. It'll give you TransUnion, Equifax, and Experian. Take those together. Give me the middle number numerically. So if one's a 720, one's a 760, and one's a 700, I'm going to take the 720. That's the middle score. And that's what we're going to use. If I pull your credit probably within 48 to 72 hours, I'm almost 99% sure to get that exact score that you have. So that's the best way to do that. So if I can be of any help, please reach out. I'd love to talk to you. So if you would, give the video a thumbs up. I appreciate that. Smack that subscribe button. I'd love to see the subscribers. We're trying to hit 10,000 by the end of the month, and I hope you help me get there. So God bless. And I apologize about the video, but tomorrow night's video quality should be superb. So stay tuned. I'll be back tomorrow, same time, same place. God bless. See you then.